Alright guys, welcome back. So let's have a look at Lyft. It's been a while. I think I have only talked about this one once, maybe like 2 years ago, 3 years ago, I don't remember. But ever since the stock has gone public, which was around like 90 bucks or something like that, the high 72, 80, and it's been pretty much in a downtrend because they were reporting losses, new IPO, bottomed out at around $7.85. And I just want you guys show you, this is a weekly chart actually. This is like 3 years of a chart. This is like 2022, 2023, 2024, 2025. So 4 years, this stock has been stuck in this range of $20 and pretty much $10, let's say. Okay, it's been in this range, but in the last 3 quarters, what is standing out is they have been reporting positive EPS. I know it's small, but it's very, very important to catch these sorts of shifts in companies' earnings where we have already seen it with, and I've mentioned it many times with, I want to go back to Robinhood, because this is like one of the examples where it has probably done, maybe this has gone public maybe about the same time or maybe later, but goes to 85 after going public, drops to $7 and spends between the 7 and 10 for about like 2 years until last year, which I mentioned a lot, and now Robinhood actually in S&P 500. This stock pretty much started reporting earnings, positive earnings, in the beginning of last year. You can see stock kept staying and valued after reporting 4 consecutive earnings EPS positive. That's actually enough to be included in S&P 500, but they just got included. And so far they have 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters of a positive earnings per share. But by this time, of course, market figured it out already, and stock pretty much at its stage where just took out actually the IPO price of a high of 85 after so many years. And I'm not saying that Lyft has to go back to those highs, but what I'm saying is at this time, if this stock like breaks the 2021 range, of course, because of positive earnings, which is coming up, let's say, what is it, scheduled for November. So end of November, if Lyft is going to report positive earnings per share again, and this stock breaks $20, the next resistance would be 30 bucks. $7 billion. I think this stock is worth way more than $7 billion. I think this stock is worth somewhere around like $40, $45, $50, which is, in my opinion, like another 200%. Let's say $50, $52 level would be 200% move, which would put the stock Lyft at around $21 billion, $21 billion. So far this year, this stock is up already 36%. It's already doing well year to date, of course. But if you just zoom in or zoom out, you will see, oh, it's been in this range for quite some time, right? Especially after 2022 bear market, it hasn't recovered that move, and it has moved sideways for 3 years after going public. So it's been pretty much, this is this 1, 2, 3, 4, 5, 6, 7th year. Versus Uber, on the other hand, already profitable. You guys can see it did break out. It's trading a lot higher in terms of valuation. It's a lot higher too. So I think Lyft has a bit of a catch up to do considering all the automation, robotaxi, and all that stuff. Even as an acquisition target, I remember I talked about this one year ago or 2 years ago or so, when Amazon had some rumor of potentially acquiring Lyft, and they were looking for, I don't know, like 12 billion or 15 billion, something like that. But I think even as an acquisition target, if somebody wants to buy giant techs, this stock is pretty cheap. They would buy it, they would pay at least double, triple of whatever it's trading at this valuation. Again, I might be biased, but I want to just quickly go through the price action. So very recently, CEO or somebody insider bought pretty big, and they issued a note which had a 40% premium. Essentially, stock was trading at 17, and the note issuer, I think it was 500 million or something like that, 430 million, 450 million. You can go take a look at it on SEC filings. Okay, I don't want to go there, but the point is that anybody, that person, that notes issuer, whoever lent the money to Lyft, pretty much bullish, and there are, if stock trades more than 40% from wherever it's trading in the next 2-3 years, which would be the price above $25, they can exercise pretty much. They can pretty much convert the amount into shares at $25, and pretty much then write the stock or sell it for profit, essentially. But up until 25, they're going to break even, or they have a choice to get the money back and just earn some interest, or they're super bullish and they think that it's worth more than 25 bucks. So they accepted that pretty much condition, and they lent the money. But again, let's see what they're going to report. But up until then, I was seeing a lot of bullish flow already, a lot of short-term, long-term. The one was standing out, $18 call for October, and the open interest still open. Somebody bought like weeks ago, like 2 weeks ago or so, a pretty big position in October expiration, $18 calls, which is close to be in the money, and they were buying it at very cheap levels. And if this stock trades above 25, I'm going to be looking for this stock to go back to filling the gap. I believe it has a huge gap down. Let's go back. I want to be super short with this one. I'm not going to go too much. The gap down, earnings gap down, it has a huge gap from 22 to like 30 bucks. If it clears this 20 and then, yeah, let's say 22 as well, then this is a huge area to fill the gap. This stock hasn't traded in this range. It just gapped down into this range. So if you pull the volume profile, you will see that it can pretty much easily go through this level without any resistance. So as soon as it clears 22.50, it's going to be pretty quick ride back to 30. Again, it has to do it because of fundamentals. They have to report better earnings for sure next quarter, which would be fourth consecutive EPS, positive EPS. And maybe in the future at some point, even this stock, this IPO, will be in S&P 500. Of course, it has to be trading over 12 billion valuation, and at the same time, yeah, have at least 4 consecutive earnings, positive earnings per share. That's the requirement to get into S&P 500. Maybe next year, maybe in the next 2 years, I don't know. But I think it is doing very similar price action as Robinhood, as Palantir has done at the bottom, where it pretty much it was just turning into positive for earnings per share. Like look at the Palantir. It took them 1, 2, 3, 4, 5 positive earnings per share to get out of this range and pretty much go back to the IPO highs was 30, 40 bucks or something like that. It took pretty quick time. As soon as they started reporting positive earnings per share, which last year actually, Palantir around this time, it was trading at 30 bucks. This is where they added it to S&P 500, like in September 9th or 10th, somewhere right here. There was an announcement. And look where it is. It's 150 in about a year. So I think Lyft is pretty undervalued. And I think if they keep reporting positive earnings, this has a potential 3 to 4x potential. But again, I don't have a position. I'm looking for some sort of leap or spread contract that is going to have at least 2 years of a time to pretty much go long. But again, I'm not going to throw all the money, but I'm going to keep it small, but I don't have a position. If I do, I'll just drop it here for members in YouTube, for YouTube members. But again, this is just a quick Lyft update. We'll keep an eye on this on the levels, but so far, as long as this stock stays above its 50-day moving average, 200-day moving average, which it is at the moment, I think it's going to build momentum. And as soon as it gets back above 22, I'll be super bullish this name. But that's the update. That's what I'm watching. Thanks for watching. See you in the next one. Peace.